oversimplify anything there? Or did I go a little bit too esoteric on it for you? Let me know if that was good. Here's a noob question. What's the difference in trend following and momentum trading? Anybody? Well, trend following, if you're going to make a difference there, my friend, and you're going to point out a difference, then let me just bring up a more neutral chart in the background here so that I can, you know, like just have something else up on the background, so this is like applicable a bit better for us. 4 hour time frame here on the euro versus Canadian dollar. Trend following is when you follow a trend. That is self-explanatory, right? Well, here's the 4 hour euro Canadian dollar chart there, a forex chart, and as I zoom back out the way, you can see that actually the trend is towards the downside. But hold on a second, just moments ago, just mere moments ago, the trend looked like it was towards the top side. What is going on here, Rocky? Well, I've just been asked a question by, and you can see it down below me here in the live chat here. That dude man says, here's a noob question. What's the difference in trend following and momentum trading? Anybody? And that's a great technical analysis question, and it goes right to the core of where a lot of people stumble with regards to understanding what it means when someone says the trend is your friend, etc. And this is a good pragmatic question. Here you would be following a trend towards the top side on the 4 hour time frame, taking advantage at key points. Perhaps if you were momentum trading, whenever you saw that there had been a move here through the cloud while we had a positive cross happening on these two lines here. So the blue one was above this red one. This is an Ichimoku cloud. I'll not go into the details there, but perhaps you saw a move here and you thought, with this move up there, it seems to be decent volume happening at the time just here. I'm going to play this momentum towards the top side, and that would have been a momentum trade. Now again as well, you're looking at the pullbacks that would have happened, and overall then you could have said, well, I'm still going to stay with this because I think there's a trade here, and that's a trend following trade. So in this region of price, you're following the trend which you say is towards the top side here, having got a higher high and a higher low. But that's very, 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 of course, you know, against the overall trend, which has been towards the downside here in this on this time frame. So you've got to ask the question, well, at which point are you then going to look to see that the trend is turned around? Where would you then start to want to de-risk, etc.? And one way that a lot of people answer that question very quickly, for example, is to use Fibonacci and to say, well, you know, we could aim towards the 618 as a retrace against the downward move, which is why it's called the Fibonacci Retracement Tool, because you're talking about a retracement in price against the downward trend. And that's how those concepts tie together, for instance. So a momentum trade is where you're following along with the momentum, and that can come in a form of a number of different ways. You'd be looking at things, but you're kind of saying here, for instance, that we've got a nice move up with regards to the RSI, giving us a bit of that momentum that we'd be looking for, along with the volume and along with the cross on the chart, along with all these other factors, and kind of going along with that momentum at that time, to follow along with that particular move and get on, you know, with the cohort of other traders around you that are seeing the same sort of thing at the time. And then when it comes to trend, you're looking at staying with something while we're able to establish that we've got higher highs, higher lows. There's a good chance that things could continue for a wee while, and perhaps maybe you would have got in and then taken some profit and waited to see if you're going to take some more. And then you're looking and saying, well, with regards to this trend up the way, we're seeing bearish divergence with these highs coming down, retesting this cloud again here. We've seen a negative cross on the Ichimoku cloud, and if we get a rejected at the neutral line on the stochastics, then I'd expect to see a turnaround here between the positive and negative on the DMI, and a follow through with this negative build up on momentum on the MACD, and then a resumption of the overall trend. Otherwise, we could maybe look up towards the 618 Fibonacci or the 50% Fibonacci retracement point, like Dow theory, just to say that it's typical to retrace towards these areas before continuing on with the prior trend. So perhaps we look up towards the 50 at that stage and say that maybe that's when things capitulate and use this momentum, if there is any, with a break past our previous highs, as with regards to hidden bullish divergence on the MACD, to then take us to that next target. Or else, of course, you know, you're looking at the trend again. And that is kind of at least some of the difference between those two things. Hope that helped a little bit. my friend. What do you think about the last moon token, Amar Ataf? I'm not even going to bother talking about all that sort of stuff. Who knows, man? Volcan Karan, guys, guess what? The market is booming right now. I'm watching my trade live and it's been so amazing. Now I know the new strategy used by most investors to reduce their losses. Volcan, prove you're not a bot. Prove it right now, buddy. Prove you're not a bot. Douglas Young, thank you, Rocky. You're welcome, my friend Douglas. Good to see you there. I hit the like button twice. That big a fan. Oh, come on, hit it a third time. I need you to hit it a third time. Right, great. So that helped. There's a wee education section. I wish I'd kind of marked that off. Oh, I'm not even recording this. Oh, this is going to be hassle for me. To make the clips for folk. Little education section for people there. So momentum is better sideways market strategy because it doesn't require the establishment of a trend. I mean, yeah, you know, that would be a good premise to debate that point from, right? That would be a good, if you're the proponent of that side of things. Momentum is a better sideways market strategy. Well, you could also kind of say, well, in a sideways market, you really don't have a trend to follow, so it's better than nothing. If that's all you're really saying, then it's not that, you know, profound a debate. So just there you go, Volcan. Thanks for that. I'm just going to ban you, my friend. So just hide you. Sorry, buddy. There you go. You're hidden. So that's what happens to bots. Just, it's a bit frustrating that there's bots, isn't there? But what are you going to do? I hope I didn't remove somebody else's comment by accident there. If I did, I apologize. So, an odd number. Got it. Yeah. You probably wouldn't get much momentum in a sideways market. That's the other thing as well, you see. So momentum trading is so often is something that people talk about as well, with like regards to the markets opening as well. I mean, if you want to talk about the nuances of this thing, if you're looking at somebody who's a momentum trader, you might be talking about as well, you might also find that they like to trade markets opening, looking at pre-market information, trying to find where there's a little bit of head of steam building up, seeing how the markets open up, looking at it, saying, if it takes out $1 here, then I think that we've got a momentum trade here to carry us up to 110, perhaps even 120, looking at a nice 10 to 20% return on my trade. If I manage my risk here by thinking that, you know, I'll stop out of a trade if it drops below 95, so stop at 94 or something, then I'm looking at a 2-to-1 trade, blah 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 blah. Do you see what I mean? So you can do momentum trading at right at the very, and then you markets open up, you've got that momentum, there's a bit of a rally happens, and then you're looking at it and you're saying, no, look, the momentum here is actually, you know, carrying us up to this next level. I'm going to just trade this next bit. I know what the risk is. The risk is that we don't have the momentum to carry us through there in the here and now. Therefore, I'm managing my risk with this particular cutoff in mind, because it's a momentum trade that's based on these factors where we'd have that to carry us through past these additional levels of risk, having already taken some of your profit on the basis that you established that you'd at least, you know, got your direction of your trade correct, etc. You know, you're sat there, it's gone up in profit, you're thinking about it as being a momentum trade off the back, you know, to be able to continue that at this stage off the back of having experienced a move coming up to that point. And then of course you carry that on through, and there you're saying that you've done a really great momentum trade. You know, the second one there, the first one pre-market, looking at it, things look like they're going to move, you get in on it, you see it has moved, you're carrying it up to this next level. Maybe there's a bit of an inflection there. You think to yourself, I've taken some profit. Actually, I'm going to, like, you know, hold this, or I'm going to even, you're going to get the move here and put my stop in profit, etc. Whatever, you know. So you see how that flow goes, and that's that. Momentum is best in arranging market set trend lines on a short time frame. Great conversation going on there as well. So that's that. Another top stream, Rocky. Taxi for Volcan. That's right. See you later, Volcan. Live long and prosper. That is super helpful context. I now understand trading a little better. Thanks, Rocky. Woo! Excellent. Not bad, right? So good. Trade and education brought to you here on the channel. Right,